Hello, everyone. Thank you for joining us today, and welcome to this weekly educational presentation, where today I want to talk to you about the only strategy that you'll need in a down market. I truly believe that, and I'm actually going to show you a lot of examples how you could have taken advantage of this past week or even past month using this particular method. Now, we've all seen what the market has done in the past week or so. In the past month, actually, it started really heading south. And what happens usually at this time in a down market is two things. What happens to investors? Either they continue to hold on to losing positions and just hope and pray that the market comes back, or they avoid the market entirely altogether and say, well, I don't want to lose more money. I'll just get out. You see, we feel both are incorrect decisions. Actually, should never be holding on when you're losing a lot of money. And secondly, there are tons of opportunities. In fact, in my opinion, I believe even more opportunities to be successful and have successful trades and consistent trades in a down market more than even in an up market. And I'm going to show you why in just a second. But please remember that we know that the markets will eventually go back up, but while they're going down, there are tons of opportunities and you can take advantage of certain scenarios. So this is what we're going to be talking about today. Now, I want to start out by giving you a standard template for a down market. This is usually what happens in a down market, and this is basically trading 101. Let's take a look at this chart right here, okay? Here's a chart of the GSPC. That's the S&P 500 index. Now, usually what happens is we'll have a rising market. As you can see, we're making higher highs and higher lows. So you have a sort of an uptrend here. This is just very, very basic. We're not getting too technical about this. And then ultimately, the trend is broken and it changes and it goes lower. As you see here, this is the S&P 500 index. Now, here is the standard benchmark. Here is the scenario that usually happens. What you'll see is you'll see a downward market, and then you'll get this bounce. Now, at this time, this is where people usually fail. But I want you to pay attention to one thing here. Look at what time it was or what the date was. We're going back to January 2008. And you all remember 2008? Many of you probably were not trading then. 2008 was the great financial disaster and the really terrible financial markets because they fell out of bed, where there was a lot of bad fundamental news with earnings, or I should say with interest rates, and also with housing. So the market really took a nosedive and went into a roughly 2 or 3 year bear market. But once again, the standard scenario is that once the market decides it's in a downward move, here's where most traders fail. They'll see a first bounce and say to themselves, okay, that's it. It looks like the sell-off is over, time to get back in. But what we want to tell people is that if you have the correct requirements in place, if you know that you're still in a downward market, this is not a buying opportunity the way so many traders make the mistake. This is actually a selling opportunity. So right here, we bounce up to this first level, and then look what happened. We sold off again. Now we get another bounce, another little rally at point number 2, and then once again, we sold off even greater. We had a third bounce where most people would say, okay, that's finally it. We're time to get back in. We're so oversold. But this was actually your third selling opportunity before it went down even lower. And then one final bounce here. And then we went down to even lower lows. This is the standard template for down markets. Let's take a look at another example here. We're still going to look at the S&P 500, but this is a weekly chart. Okay, so we're looking at a weekly chart. The same scenario applies. We're making higher lows, higher highs, and then that uptrend is broken, very simply broken, and we go into a downward market. Now, as I said, most traders follow the two-part scenario. They either hold on to losing positions, hope and pray that they'll come back and just break even, or else they'll avoid the down market entirely and say, I'll take my losses, I'll lick my wounds, and I'll just stay out, when there's lots of opportunities. Now, once again, let's look at this time frame. This is a weekly chart of the S&P 500, but look at the date down here. This was January 2001. I can venture to say that a lot of you probably were not trading then. This was the great dot-com crash of 2021, almost about 25 years ago. The market went into a sustained downward move for 2 or 3 years here. But the same scenario applied. We have a downward market followed by these bounces where most people think, okay, well, it's time to get back in. The sell-off is over. But these are not buying opportunities. These are selling opportunities, and you make lower lows. You get another bounce where most people say that must be it, but actually it's another selling opportunity where you make a lower low. And then you bounce again, kind of make a double top here. That's selling opportunity number 3. And then lastly, another bounce, selling opportunity number 4. So you see the same things happening over and over again. This is cyclical. This is not something that, is just akin to what happened this past month. Let's take a look at one last chart here. Once again, the S&P 500, we're following that same scenario. We have a nice upward trend. We have higher highs, higher lows, and then the trend is broken. But look where we're looking at now. This was last month, March 2025. It's funny how the chart almost looks the same as those last 2 examples, right? And look what happened after that. We broke the uptrend in the S&P 500. And then just a couple of weeks ago, we had a nice bounce. This is where everyone thought, okay, it's over, time to go back up. Looks like the market had a sell-off and we're going to continue making higher highs. But once again, if the requirements are all met, this was actually not a buying opportunity, but a selling opportunity. Right here, you could have taken advantage of selling, and we all know what has happened in the last week or two. Okay, in fact, the markets are actually even lower. I took a snapshot of this on the 4th, which was last Friday. And we've all known that we've gone even lower, and it's just kind of hovering down there, okay? So you see the same things happening over and over again. If you can see these patterns that have repeated themselves, not only decades, but, just centuries that keep happening in all markets, it's just natural, well, then we can take advantage of this. So a lot of traders say, well, how could I have taken advantage of this? Is there a strategy you have that can take advantage of these little bounces? Well, yes, there is. In fact, this is what we're going to be talking about today, and this is the title of today's educational presentation, because we truly believe it's the only strategy you'll need in a down market that can take advantage of these little bounces and retracements. So welcome once again. First of all, let me just share this with you. Everything you're seeing today is on the PTS Primo Charting Platform that I developed and designed with Pro Trader Strategies that actually auto-identifies these down market signals. Okay, now I'd like to welcome you all to this educational presentation. My name is Steven Primo. I give these educational classes once a week, totally free, so that you can learn something and hopefully understand our concepts of what it really means to trade. We're a little bit different from other webinars you may have gone to in that our only goal is to educate you. We're not trying to tell you what the market's going to do. We're not predicting what the best stock is to sell or buy or what the best time frame is. In our opinion, a good mentor doesn't do that. He provides you with the information so that you can make your own decision. You see, no 2 traders should ever trade alike. This is something I've learned in my nearly 5 decades of trading. I first started trading on the floor at the Pacific Stock Exchange in the 70s. I was on the trading floor for 16 years, and 9 of those years, I was a specialist. That's where we get the name specialist trading. A specialist is just someone who made markets in roughly about 60 stocks. If you wanted to buy or sell a stock in the old days, you didn't go through electronic trading. We didn't have that then. You had to actually place an order over the phone to your floor broker, who would walk up to the trader who specialized in making a market. So I did that for roughly 9 years as a specialist. I made markets in stocks like IBM, US Air, Waste Management. And so I learned a lot of things in my nearly 5 decades of trading, and mainly things that have high levels of consistency. You see, most traders are looking for these fly-by-night, get-rich-quick schemes where, oh gosh, I'll be able to retire in a year. People advertise these things. And what I found is that if you are searching for things like that, sure, every once in a while, they'll give you some tremendous successes, some quick home runs in trading, but usually they give it all back. What traders should do is not follow what someone else is telling them or giving them signals on what to trade. You should make your own trading decisions. That's the main thing I've learned in my nearly 5 decades of trading. The only traders that are still around from my days of being on the floor are the ones that make their own trading decisions. They don't go to a nightly service that spits out signals. They don't listen to guys on TV and listen to what they think you should be doing in the market. They don't go to chat rooms or trading rooms. They have a simple plan in place that fits their persona, and they just simply apply it each and every day. That's how you become consistent. Now, our job as a mentor is to provide you with these things that are consistent so that you can pick and choose from them and develop your own trading style so you can make your own trading decisions. So that's our goal of specialist trading, and you'll see that in today's educational presentation. Now, Before we begin, we're required to share this with you, so please take a moment to view our disclaimers. I'm going to show you a lot of performance results by applying this strategy that's perfect for down markets, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are, as I just stated, first and foremost, an educational company, all examples are strictly for educational purposes only. Now, I see a lot of new faces in our participants list today. If you haven't done so already, please feel free to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. I would recommend copying that down because every day I post anywhere from 5 to 7 or 8 different snapshots of signals our methods have generated, or little bits of financial wisdom. Lots of great free education on a daily basis to follow us on X. And also, if you'd like to see more of this weekly education coming to you live on YouTube, please feel free to subscribe. Hit the subscribe button. We know we have people watching us on YouTube right now. And if you'd like more of this content, please make sure to hit the subscribe button. Okay, with that stated, let's begin today's educational presentation. So what is this strategy that we're going to be talking about that is perfect for these markets, the current market scenario? And it's strategy number 7. Okay, this is a great strategy. We've had tremendous testimonials from students that just purchased it because it's a fairly new method. It's very new. We just introduced it this year. Let me tell you about some of the highlights of strategy number 7, okay? First of all, it's our brand new pullback strategy. What is a pullback? Well, remember, once again, in an uptrend, in an overall uptrend, a pullback is when price sells off or retraces and you buy at these lower levels because it's going to continue on its upward way. But now, since we're in the opposite scenario, a pullback can work to the downside, meaning that you have an overall downtrend in the market. And on these little bounces that I just shared with you, that's where the strategy generates sell signals. Now, you can apply this to all markets, all directions, and all time frames. So there's nothing to change if you like to trade multiple markets or multiple time frames. The same rules apply to all of these categories. Now, it's designed to trade these quick pullback gains, as I just shared with you, and you'll see a lot of these examples in the upcoming moments here. Now, it's based on an open, high, low, close, 2-pattern model. So basically, it's a pattern recognition model. We have a lot of scenarios with other methods that are based on indicators and things of that nature, but this is not at all. It's based on an open, high, low, close, 2-pattern model. Now, because you are buying at lower levels when you're in an uptrend, but now that we're in a downtrend, you can sell at higher levels. This makes it ideal for option trading. So we recommend this to a lot of our option students who like to trade options. And then lastly, in the course, we teach you conservative as well as aggressive ways to trade this. Remember, as a mentor, we're not going to give you just one way and say, this is where you enter, this is where you exit, this is where you place your stop, the way so many other strategies do with other companies. We don't believe in that. Once again, no two traders should ever trade alike. And the reason is, as you see here, some traders are conservative. They have a smaller risk parameters where others are aggressive. Maybe they have a larger account size. Maybe they're trading with $200,000, $300,000 as opposed to someone trading with maybe a $5,000 or $10,000 account. This is going to determine how you get in, how you place your stop, how you exit. So no two traders should ever trade alike. We provide you with all these different variables so that you can make your own decision, make your decision based on what makes you feel comfortable, how long you want to stay in the trade, where you want to place your stop. And then we work with you and help you put that together, okay? Now, we are in a down market. We all know that, all right? It's very easy to see. This is not something that's subjective here. We all know that we're currently in a down market. So we're only going to focus on down market signals right now. Remember, everything you're seeing and everything is really easily applied just by one click on our PTS Primo Charting Platform. This is the educational platform I developed with Pro Trader Strategies that actually auto-identifies the strategy number 7 setups. All right, let's start out right now, and we're looking at Adobe, ADBE. All right, as we can see, the trend is going lower. All right, we just shrunk these charts just to show you, and you can have more of a condensed view, but actually this has been going down for roughly a month. And a gap down here, this was a very strong downward opening. But then look what happens. And this is where traders say, well, gosh, you know, that guy on TV says we've bottomed out. We're starting to go higher. We have a higher bottoms here, and it looks like the trend is starting up And maybe if I buy the way that guy in that trading room says, I can exit here if we go back and fill in this gap, all right? This is why traders lose, because you are out of sync with the overall trend. The overall trend is down. So here's what we suggest to our students. First thing you do on our platform, it's as simple as this: click on strategy number 7. In the drop-down menu, click on signal arrow, and it will tell you if there is a signal generated. And actually, there were 2. Right on this bounce here, where everyone thought it was time to get back into Adobe, it was actually saying that is that bounce that we talked about in the opening segment, where you have a down market and everyone thinks, okay, we bottomed out, but it's actually a selling opportunity, not a buying opportunity. And had you taken the sell signals, you could have potentially captured 25 points coming into last week. Here's another example in ADI, okay, analog devices. Once again, we're kind of slowly heading lower. And now we have a 2-day bounce. And someone says, wow, but you know what? It bounced up on this really good news. I watched that guy on TV and he says, that's great news. Maybe it was earnings. Maybe it was something significant about the company. And we're closing above this last high here on this day. So this is telling me we've broken out to the upside. I've got to buy here the way they're saying on TV. Okay. Once again, if you know the rules to this method, you'll know that the overall trend is still down. Click on strategy 7. See if there's a signal here. Click on signal arrow. And yes, on those 2 bounces up, those weren't buying opportunities. Those were selling opportunities. We don't care how good the news was that caused this stock to gap up. 30 points coming into last week. This is why we say this strategy is so important, especially in a downward market. How about AVGO? All right. Now, someone could make an argument for there being some major support here. It looks like we hit a bottom, and now that's major support. That's where all the buyers are. So you want to buy, right? Click on strategy 7. Perhaps it will generate a buy signal, but let's see what it said. Nope, we're still in an overall downtrend. And in fact, you have 2 sell signals here. Now, nothing much has happened since the sell signals were generated. You're still in the trades, just using a standard generic stop. Ultimately, it kicked in once again to last week, 35 points. Let's look at MDB. Now, there's a major bounce right here the last 2 or 3 days. The stock has closed towards its high on each and every day. So you figured yourself, this is going to start going up, right? But strategy 7 says no. Click on signal arrow. These are part of that bounce. Remember, we said that in the very opening statement, where we have an overall downtrend and then you get a bounce and traders think that's it, we're going back up. When in actuality, this is not a buying opportunity. This is a selling opportunity. Now, we know that a lot of traders do not like to go short or buy puts. They feel uncomfortable. They don't feel right going against the market. That's fine. But let's say you were long this stock. Don't you think you could have used this as an exit or 2 exits to get out? Because had you done that and exited, let's say you exited with a loss, well, that would have been much better by having 35 more point loss as well. All right, 2 sell signals were generated in the SMPS right here. 50 points coming into last Friday. This was just 4 days ago. Some of these stocks are actually even lower now. Let's look at Meta. Okay, 2 more signals generated here to go short. All right, someone could say, but yeah, Steve, but we broke that downtrend. I know the market's been going down, but now's the time to buy. Not really. 85 points to the downside in 2 weeks. Once again, if you don't like to go short, we're an educator. We're not going to tell you what to do. This is not a system where you have to trade. Everyone has to trade and enter at the same place. If you don't want to take the signals, that's fine. But if you're long, you can use these to get out. You could have saved yourself 85 points. I know a lot of traders and a lot of students of ours who are brand new are coming to us and saying, gosh, Steve, I've lost so much money. I listened to some guy saying it's going to turn around. We're going to go higher. And I just keep holding on and we're losing money. We never predict what the market's going to do. We let the market tell us what it wants to do. That's why traders fail, because you're always trying to outguess the market. In my opinion, that's silly. That's like trying to outguess what a river is going to do. Isn't it easier, rather than swim upstream, to just swim with the current at your back? That's the philosophy behind all of our trading methodology at Specialist Trading. We're never trying to fight the market. If it looks here like we're trying to go against it, this is actually just selling in an overall downtrend, and we're being in sync with the market as opposed to being out of sync with it. You only lose money when you're out of sync with the market. Think of it. If the market wants to go lower and you're buying or you're holding, you are not doing what the market wants to do. You will have a higher level of consistency if you simply want what the market wants. And currently, the market wants to go lower. So on these little bounces, remember, they are not buying opportunities, they are selling opportunities. And strategy number 7 is perfect to take advantage of those bounces. Now, here's a weekly chart of Regeneron, okay? Same process applies. There's nothing we have to change. We had a little bounce here. Everyone could think, okay, well, this is going higher. Nope. Sell signal was generated in February, and the stock has fallen 85 points in a little over a month. All right, now we know not everyone trades stocks, so let's look at some other markets, and not everyone trades daily bars, so let's look at some different time frames. Here's a weekly chart of the Australian dollar. Now, strategy 7 was in an overall downtrend. We had a little bounce right here. Most people would have thought, okay, the Australian dollar is going higher, but 2 sell signals were generated, 360 pips in the next month. That's close to $4,000 per unit you could have potentially captured. Or we can look at a 30-minute chart of the Canadian dollar, all right? On a 30-minute time frame, strategy number 7 analyzed that the overall trend was down. It analyzed that this was just a bounce. We're not in any way out of sync with the market by selling on this bounce. And 225 pips, close to $2,500 potentially you could have captured in a little over 1 day had you sold the Canadian dollar. All right, a 10-minute chart of Tesla, okay? This was on Thursday, not even a week ago. All right, we've all known that Tesla has been in a downtrend. It's been going much, much lower. We don't care about anything fundamental or anything that has to do with news or information of that basis. Everything at specialist trading is based off the chart in front of you and what the market is telling you. We're not interested in fundamentals. In fact, I stopped looking at fundamentals when I was on the floor some 48 years ago. And if I'm still around here trading, I'm living proof that you really don't need to focus on that at all. So it's our opinion that fundamental news and information that only serves to confuse you and to bring a lot of fear and doubt. We just look at what the market's telling us. And on this 10-minute chart, obviously Tesla was going lower. We had a little bounce here of 2 or 3 bars. 2 sell signals were generated, and we've all seen what happened with Tesla. You think you would have liked to make 32 points in just 1 day by selling those 2 little 10-minute bars? You could have done that using strategy number 7. And then lastly, we're looking at a daily chart of currency pair here, the Swiss franc. All right, so going through the process, the market is going lower. And then all of a sudden, someone would say, well, we stopped going down and there's major support here to buy the Swiss franc. So, I'm a forex chat room guy, or I like to blog or go on TikTok, and I always tell everyone what I think the market's going to do. And in my case here, this is a very strong recommendation to buy the Swiss franc, right? This is why we lose money, because we follow someone else. Remember, it's our philosophy never to listen to anyone else, not even me, some guy in a chat room. I never predict what the market's going to do. I never tell my students what I think. I simply give them the information to make their own decisions. So what is the information based on? It's based on market behavior. And based on market behavior, this is not support. If we click on strategy 7 and we click on signal arrow, the market is telling us, actually not even telling us, it's screaming to us it wants to go lower. We don't care about some so-called fundamental support or some big bank or some institution buying the Swiss franc. Look what happened just last week. It fell 300 pips, or close to $3,000 per unit, per sell signal, okay? So it makes no difference what market, it makes no difference what time frame. So let me ask you a question before we tell you about a great offer. What are you waiting for? Have you been struggling for the last month or 2 with this market? Take charge of your trading with strategy number 7. Here's a great offer we have for you today, okay? We're going to offer you our brand new strategy number 7 at a deep discount. 2 different ways to purchase it. You're going to get the new and improved trading version of strategy 7 designed to identify these pullbacks based on an open, high, low, close 2-pattern model. It reduces the noises and the whipsaws, and you can apply it to any market and to any time frame. Remember, this is perfect for option trading if you're an option trader, because you get to buy at these lower levels in an uptrend, in an upward market, and in a down market, you get to sell short or exit at these higher levels. Perfect for option trading. We have an aggressive and a conservative version as well. Now, everything you saw today was displayed using the platform that I developed with Pro Trader Strategies. All right, this is the educational platform that actually auto-identifies these signals. With one click, you can see where strategy 7 signals are. So here's what we're going to do. We're going to offer you a full year free, 12 months absolutely free if you decide to become a student of mine in the strategy number 7 course. Now, this is just the tip of the iceberg of what you'll get on the platform. A lot of people say, well, will I just get strategy 7? That's it? No, you're going to get literally dozens of things that have taken me decades to accumulate in my trading career. Things like the buy-sell line indicator, an indicator I developed that automatically tells you what the overall trend is. A strength of trend feature, another tool I developed that will tell you if the market is running out of steam or has a lot more room to move in that same trend. You can scan for nightly signals, so you don't have to look through thousands of charts the way I used to when I was on the trading floor every night. You can basically, in less than a minute, scan through the S&P 500, currency pairs, futures, crypto, ETFs, all the major indices. It makes no difference. We provide you with those lists, okay? Automatic exit levels we share with you on the platform. With one click, you'll see where these automatic exit levels are. This also includes automatic stop placement levels as well, okay? And that's just the tip of the iceberg. There are just tons of different things you'll get on the platform. I just don't have time to go into right now. But we know that not everyone's convinced. So if you don't think you need strategy number 7, let me go over what we talked about earlier at the very beginning of this presentation. Remember, we talked about how down markets go through the same scenario over and over again. They keep repeating the same patterns. The reason why most traders fail is because they fail to see these patterns. They get too caught up either by listening to someone or following some faulty indicator that says the market has bottomed out, or some guy on TV says you have to buy here, you have to buy and hold because we're going much higher, when in actuality, you're out of sync with the market. Let's take a look at that first example. Here's a weekly chart of the S&P 500. Remember, if we look down at the bottom here, going back about 24, 25 years, this was 2001. I traded through this. This was the great dot-com crash. A lot of people got laid off. A lot of businesses went under. A lot of internet companies went under in the great dot-com crash because they were overextended. We follow this same pattern. Once we break that upward trend in the markets, look what happens. We go lower, and then we bounce. And on this bounce, this is where traders usually lose money. They either hold on to their losing positions, thinking they're going to get out, or they buy more into that, where this is actually a selling opportunity. And right here, it goes lower. Then you have another bounce or another retracement, another selling opportunity, and you make lower lows. And then you had another bounce here, another selling opportunity, two selling opportunities, and maybe make lower lows. And then finally, a fourth and final bounce, and we made new and lower lows. This was roughly 24, almost 25 years ago. Let's move it up now, 7 years to 2008. The same scenario. We broke the uptrend. On the first bounce, traders said, okay, that's it. We're going back up. Nope. That was a selling opportunity. We sell off, bounce again, another selling opportunity, make lower lows, bounce up again, another selling opportunity, and then finally bounce up again, and the last selling opportunity, okay? Now remember, this is the S&P 500. Now, this was 2008. We had 1, 2, 3, 4 opportunities to go short. We had the same thing on a weekly chart in 2001. Let's look at the current chart. This just happened last month. Here was the uptrend. We broke it. Here was our first bounce that just happened about 2 or 3 weeks ago. We've all seen what happened. Do you think, looking at the previous charts, that we're going to have another bounce here? Now, during that bounce, what side of the fence are you going to be on? Are you going to say, hey, well, I guess I'll hold on to my position. It's going to go higher. I'll buy some more. Are you going to listen to the guys on TV telling you that we've bottomed out, or that we're making lows here and that this is it? Or are you going to remember those last 2 examples I just shared with you of really strong downward markets and say, this is not a buying opportunity. This may be a selling opportunity. So how could you take advantage of it if it was a selling opportunity? By trading with strategy number 7, because it is designed to look for those selling opportunities to either exit your position or to go short. Remember, this is the only strategy you'll need in a down market. So let's talk about the great offer we have for you today. This is our brand new strategy number 7 offer. Now, strategy 7 is so powerful, it can help you so much. It's usually priced at $49.95. If you'd like to buy it in full, here's what we're going to do. We're going to discount that price 10% down to $44.95. Okay, you're going to save $500, 10%. But we realize that still may be a little bit too expensive for people, so we will also establish a payment plan. Now, for a fraction of that $44.95, you can still be up and running and still get a full year of the platform as long as you just establish a payment plan, a monthly payment plan. So there's 2 ways to purchase. Either get the 10% discount at $44.95 or use the payment plan option where you just put down a fraction of that $44.95 and establish a monthly payment plan. Either way, you will still get a full year free of our platform. That usually runs close to $2,000 per year. That's entirely free. So this is actually reduced down from $7,000 roughly down to either $44.95 or a fraction of that cost. Remember, both ways, either way you decide to go, includes 12 months free of the platform. So be one of the first to trade with the brand new strategy number 7. This is a great, great method. I trade it myself. It's fantastic for trading, or at least giving you an idea. A lot of our students actually just apply it with the indices, and then they will make their decisions off the individual stocks, what they want to do based on that. So in other words, if we're in a down market the way we've been, and you have a sell signal with strategy number 7 and those little bounces, well, it doesn't mean necessarily you're going to be trading the S&P futures or the VIX or any of the industry variables. You could just decide what you want to do with your stock. In other words, if the S&P 500 is telling you it's going to go lower, well, maybe you want to sell your stock or maybe raise your stop. There are lots of different ways to apply it. We'll be there with you every step of the way. Here's how to take advantage of this. Contact my sister site, which is Pro Trader Strategies. They developed the with me, and they're also in charge of all the discounts and establishing payment plans. If you'd like, they can take your order to the phone. I would give them a call at area code 310-598-6677. They have trading consultants manning the phones. There's absolutely no obligation if you'd like to call. We realize that no one wants to feel obligated. They're there to work with you. They'll answer any question you have about payment plans. They'll give you a quote. They'll tell you about anything else we have for for offer at a discount, and they're very flexible. So don't feel obligated. Don't feel threatened that you have to buy something. There's absolutely no reason. They're there to work with you, and they're very knowledgeable. Okay. Now that link you see at the very bottom right here is the link that will take you to the info page, or you can sign up there if you'd like as well. It's not a live link, but they just posted a live link on the webinar chat box. So if you look and see that little webinar chat box, just click it on and you'll see a link that's been posted there, and you can click that on. Okay. Now I'm going to leave this information up here if you'd like to copy down the phone number. And also, if you'd like to ask me any questions right now concerning what I just went over, or anything that I may not have covered or you didn't understand, please go to either your chat box or your question and answer box, your Q&A little icon there. Just click them on and I will answer them to the best of my ability. If someone already asked something, they said, oh, is this being recorded and shared? Yes, this is being recorded. Each and every one of you will be sent a link to this recording so you can watch it at your own leisure. Okay. So yes, we record all of our free webinars so that you can watch them later on and you can help make your decision. Okay. So I think we have a couple of questions here. Let me see. Someone is asking about, will the strategy need to be updated or recalibrated? No. Once, with all of our strategies, once we have them, we've tested them for sometimes years. Once you have the strategy, it's there to work with. And remember, these are not systems. These are strategies. The difference is a system is something that you must follow like exactly each and every time. So if it gives a buy signal, everyone buys at the same point. If it gets a sell signal, everyone sells at the same point. You all place your stop at the same area. You all exit at the same. That's how you have a system, because you want to establish statistics based off that. Well, this goes entirely against our philosophy at Specialist Trading. We don't believe in systematic trading. We don't believe in statistics because, well, first of all, I've been trading for nearly 50 years now. And if there's another thing I've learned, is that statistics are all meant to be broken. I can't tell you how many systems and that I've traded and even taught to other people that eventually went bankrupt. I mean, they all just folded. They had tremendous stats going back 10, 20 years of tremendous results, winning years. And then when the market environment changed, they all bellied up. None of them survived. So we don't have a lot of faith in systematic trading. What we have faith in are strategies. Now, strategies are roughly 75% rule-based, but they allow for 25% discretion. And that discretion is what we teach you on how to enter at a different spot, how to exit a different spot, so that you can be a part of the scenario, so that you're a part of the process. Remember, no two traders should trade alike. If you're trading the system, everyone who has that system is trading the same way. We don't believe in that. We have tons of traders who have the same, let's say they get a buy signal in a certain stock. They can have 5 or 10 different results, and that's fine because that's the way it should be. One trader may trade it conservatively and get out very quickly, but with a small but nice profit. Another one could say, no, I'm more of a swing trader. I'm going to exit here for a larger profit. Someone could be saying, no, I'm an investor. I'm going to stay in for 5, 10 years. So they all have different results. So there's nothing wrong with that, okay? That's what we teach. You should all teach, I should say, a trade according to your own mean. That is how I have found out in my 50 years of trading that you will only become a consistent trader, okay? Now, is there an exit method? Yes, we furnish our traders with upwards of 6 or 7 different ways to exit, 6 or 7 different ways to enter, 6 or 7 different ways to place your stop. So yes, this is part of what we're talking about. We have all these different variables so that you can make your own trading decision, okay? Last question we have here. Does this also work well in up markets? Oh, yes. You know, if we were in a very strong upward market, I would be sharing with you the same exact webinar and these examples, but in an uptrend, meaning that we would be looking for buy signals. So in an uptrend, in an overall uptrend, it would be the opposite of what we're experiencing now. The market would be going higher and higher, and every once in a while would have these sell-offs. That's where strategy 7 would look to buy on those sell-offs. But unfortunately, we're not in an upward market, and a lot of traders have very difficult time trading these down markets. So strategy 7, as we said, is the perfect strategy for trading these down markets. Remember, we've only had one bounce so far. If this market is really going to turn into a bad market, the way so many are thinking right now and the way it really looks, you're going to have at least 2 or 3 more bounces. Don't you think strategy 7 could help you? Come on board. Give Pro Trader Strategies a call at 310-598-6677. They'd be happy to give you a quote, or if you've already decided, they would take your order over the phone, okay? Okay, if there are no further questions, as we close here, let's take one last look at our disclaimer. I just want to thank you for taking the time out of your Wednesday. I know a lot of you are struggling and a lot of you are having a very difficult time now. I really think that Strategy 7 can help you. So at least come on board, see what it's like, or call Pro Trader Strategies to get a better idea if you have any questions, all right? Thank you so much for attending today. I look forward to seeing you all in the Strategy 7 course, and I wish you all the best of luck of trading. Bye-bye.